Welcome to e-Adhyayan Commerce. Today we will talk about one of the important aspects of accounting, that is cash flow statement. Cash flow statement has been defined section 2 subsection 40 of the Companies Act 2013 and is governed by Accounting Standard 3 or Indian Accounting Standard 7. Here we will talk about cash flows, and thereafter we will talk about different types of cash flows, that is operating cash flows, financing cash flows, investing cash flows, and so on. First, we understand the cash flow. Cash flow is the net movement of all the cash and cash equivalents of the business. So, it is the total movement or net movement of all the cash and cash equivalents in the business. Now, what do we mean by net movement? Net movement is the total cash inflows, minus the total cash outflows of the business. So all the inflows that are taking place in the business minus all the outflows of cash from the business. And now cash equivalents. Cash equivalents are those assets or securities that are easily convertible to the cash, like treasury bills, okay, or let's say government securities. So these are easily convertible to the cash. Now, cash flows, it shows the liquidity of the business. That is how easily and how fast an asset can be convertible into liquid cash. Then it also shows the feasibility or viability of the business. That is how easily a business can cover the short-term and long-term obligations, okay, the financial or monetary obligations of the business. And finally, it shows the financial health, that is the overall financial health of the business. So this is our idea about cash flows. After understanding the cash flows, now we will look at the cash flow statement. Cash flow statement is the financial statement that deals with inflows and outflows of the cash and cash equivalents over a period. It is being defined in section 2 subsection 40 of the Companies Act 2013 and is governed by Accounting Standard 3 or Indian Accounting Standard 7. Now, if we classify the cash flow statement by sign, it comes positive, that is all the inflows that are taking place, and negative, that is all the outflows. Okay. Again, if we are segregating or classifying as per the activity, then it will be operating, investing, and financing. So this is the primary idea or the basic idea of cash flow statement. Now we will talk about cash flow from operating activities. It is the flow of cash in a business from the core business activity, that is the main business activity, that is i.e. from the day-to-day transactions. Okay, let's say for a manufacturing company, garments manufacturing company, if they are selling the garments to open market, so the sales, the money they are receiving will be considered as cash flow from operating activities. So the cash inflows in operating activities can be again income from sales, okay, income from sales, it can be from royalties, commissions, bank. Now you see, interest from other sources will not be considered here, but the interest that we are receiving from banks, that we are regularly receiving from the banks, let's say monthly or quarterly from the banks, will be considered here. So bank interest, bank interests. Okay, now you see, these are the inflows. Now we will talk about the outflows. Outflows can be the payments, okay, that we are regularly doing. The payments to the suppliers. Payments to suppliers, okay, that you are buying raw materials, so you have to pay to the suppliers. Again, to the employees, you have to pay the salaries, wages to the employees. Again, rent paid, the rent that you are paying regularly every month. Okay, income tax paid. So these are the examples of inflows and outflows that are the part of operating activities. Now we will talk about the significance of CFO. We can also call cash flow from operating activities as CFO. So the significance of CFO is that it tells us about the core business trend, that how much sales are happening in the business, okay, from the core business trend that can be understand from the operating activities. Then the overall liquidity and the solvency, okay, the overall liquidity of the company, so that it will be solvent for a longer period of time, can be understood from the operating activities. And the actual profit, not accrual, it is very important. Actual profit means profit that has been earned in cash, not in accrual or accounting basis, that we should have earned within a specific period of time, is considered and understood through operating activities. So this is the whole idea of cash flow from operating activities, or CFO. Okay. Now we will talk about cash flow from investing activities. It is the flow of cash in a business from acquisition or disposal of the long-term assets and investments which will generate profit for the business in the future. It is being done purely from the investment purpose. You see, it is the flow of cash that has been generated when we are acquiring, that we are buying, or disposing, that we are selling long-term assets like PPE or investments for the purpose of generating profit for the business. Okay, now we will talk about the outflows. Okay, so it is the acquisition of PPE, okay, that we are buying fixed asset. So writing it down, acquisition of PPE. Okay, now you can be also can purchase the securities, that is shares or bonds, from other companies as well. Okay, so buying securities. Okay, it can also happen that this business is providing loan to others, to other businesses. So providing loans. Okay, also this business can acquire other businesses. So these are all part of cash outflows in investing activities. Okay, so acquiring business, okay. Now if we are talking about the inflows, okay, so this will be the reverse of the outflows, that we are selling the PPE, sale of a fixed asset, okay, that will generate cash. Again, that we have bought securities here, so we will now be selling them. Okay, sale of securities, sale of securities. In the outflows part, we have provided loans. Now the loan will be repaid to us. Okay, so repayment of loans. Okay, so these are the things that are the part of inflows and outflows of cash in investing activities. Now we will talk about the significance of CFI. We can also call cash flow from investing activities CFI. So now we will see the significance of CFI. First thing is that it shows the investments of the company, that the investment a company is doing for generating profit in the future. Next, it shows the capex. Now capex is the capital expenditure. It shows that the amount of money a company has spent to acquire PPE or fixed asset. A fixed asset will generate profit for the company or the business for a long amount of time. So this will be shown in the investing activities as well. So this is the brief idea of cash flow from investing activities. Now we will talk about cash flow from financing activities. Okay, it is the flow of cash in a business to raise or repay capital. So it's a very significant factor of a business, that is the capital of a business. And when we are raising the capital of the business or repaying it, it will be considered a part of cash flow from financing activities. So now we think, what are the activities that we do in order to raise capital in a business? Okay, so first we'll talk about the inflows. Okay, now that we are raising the capital of our business. Okay, so first we do that we issue shares. Okay, so we'll write here issue of shares. Okay, we can also issue debentures as well. So issue of debentures, long-term loans. Okay, we can also borrow funds. Writing it here, borrowing of funds. So these are the ways by which we can raise the capital for our business. So these are the inflows. Now we will talk about the outflows. You see, we have issued shares to raise the capital of our business. Now that we have issued the shares, we have to pay them dividend. Okay, so payment of dividend. Okay, now that we have issued debentures, we have to pay them interest. So payment of interest. Again, the loans that we have taken to form our capital, that have to be repaid. Okay, so loan repayment. Okay, and finally the shares that the shares of this company has been brought back, that is the buyback of shares, that will be also considered in the outflows. Okay, so buyback of shares. So these are the inflows and outflows that are part of cash flow from financing activities. Now we move on to the significance of CFF. The cash flow from financing activities is also called CFF. Okay, so the first significance is that it defines the capital formation or allocation of the company. You see that we are issuing shares, okay, that means equity shares, and then we are issuing debentures. So equity capital, debt capital, these are all being talked about in the financing activities. So it tells us about the capital formation of the whole business. Next, the long-term solvency. Obviously, because we are forming the capital, the very reason the business will be functioning for years to come. Okay, so the long-term solvency and the profitability of the company is also understood through the financing activities. So this is the idea of cash flow from financing activities. Now we will talk about different items of cash flows that overlaps between investing and financing activities. But first we have to understand the motive behind these two activities, because sometimes we are not able to understand that which one should be considered as investing and which one should be considered as financing. So first we need to understand the motives behind these two activities. You see, when we are talking about investing activities, the motive of us will be generating income. Okay, that we will be thinking about generating income. Okay, so this is the primary motive behind investing activities, that we will only think about the activities that will generate income for us. Okay, that will generate returns for us in the future. But in case of financing activities, we will be thinking about only those activities that will help in raising, or formation of capital. Okay, so this is the very important thing to understand, that when we are thinking about investing activities, our primary motive is generating income. But when we are thinking about financing activities, our primary motive is capital raising. So this is the primary motives behind these two activities that we need to keep in mind. So it will help us to understand and identify that which item will be considered a part of investing activity and which item will be a part of financing activity. Okay. Now we will talk about the items in detail. The first item that we will be talking here about will be loan and debt instrument. You see, when we are providing loan to others, okay, that we are providing loan to other businesses, we are helping them to raise their capital, or we are buying debt instrument from other companies. Okay, in both the cases, what will happen, that when we are giving the loan repayment will happen obviously, but in the meantime we will be also receiving the interest from the loans that we have provided to others. And in case of debt instruments, again the interest will come. So in both the cases, when we are providing loan or buying debt instrument of other companies, we are generating income. These are not for our own company's capital formation. These are only for generating income. Okay, that we are generating return from them. So this will be considered as investing. So when we are providing loan, and when we are buying debt securities, of other companies, then it will be considered an investing activity. Okay, now say we have taken loan for formation of the capital of our own business. Okay, or we have issued debt instrument. These are the things that we are doing to raise capital of our own business. Then those will be considered as financing activity. Okay, so here we have provided loan, or now we are taking loan or borrowing fund. So taking loan, or we can say borrowing fund, and issuing debt securities, so these are the things that we are doing to raise the capital of our own business. So this will be a part of financing activity. So when we are generating income, it is the part of investing. But when we are doing something to raise the capital of our own business, then it will be the part of financing activity. Okay. The second item that we will be talking about here is equity and dividends. You see, when we are buying the equity shares of another company, the motive behind that is that we want to earn the dividends from that equity shares. So our motive is not here to raise the capital. When we are buying the equity shares of another company, the primary motive is to earn dividends from that shares. So that are solely done for the purpose of generating income or generating returns. So that will be a part of investing activity. So purchase of equity, purchase of equity shares, purchase of equity shares, that means that we will be receiving dividends, and that is something that we call as return. Okay, the return or income that we are earning from our investment purpose. So this will be a part of investing activities when we are purchasing the equity shares. But you see, when we are issuing the equity shares of our own, that is done to raise the capital of our own business. Okay, so when we are issuing equity shares of our own business, we also have to pay dividends to the shareholders. So in this case, we are paying dividends to the equity shareholders. So here, issue of equity shares, that means paying dividends. So in simple words, it can be said that when we are receiving dividends, then that is part of investing activities because we are generating income or return. But when we are paying dividends, that means that we have already issued the equity share to raise the capital for our business. So that will be a part of financing activity. Okay. The third item is investment in subsidiary company by the parent company. You see, the parent company has invested in subsidiary company. In simple terms, the parent company has provided loan to the subsidiary company. Now you see, in these cases, when we are providing loan or the business is providing loan to another business, in those cases, these activities are done to generate income. These are not for raising capital for my own business. So when we are doing something to generate income or earning for our business, that will be considered as investing. So from the point of view of parent company, parent company will earn interest. Also that the loan will be repaid. Okay, the loan that the parent company is providing to the subsidiary company will be repaid to the parent company. So it will earn interest as well as the loan repayment. And if you see from the aspect of subsidiary company, it is receiving loan from the parent company to raise the capital of its own. So from the aspect or the point of view of subsidiary company will raise capital. Okay, so when the parent company is providing loan to the subsidiary company or investing in the subsidiary company, from the parent company's point of view, it is an investing activity, but the same thing from the aspect or point of view of subsidiary company will be considered as financing activity. Okay. So that's all about cash flow and cash flow statements and different activities of it. I hope I have helped you to understand cash flow and cash flow statements in a very simple and understandable way. Hope to meet you in the next video. Thank you.